Hey, welcome to the September Mortgage Minute. I hope you had a fantastic summer. I'm looking at some of the headlines this week, and boy, there's just so much news that I can share with you. But I'm just going to go through some of the headlines I'm seeing on the Globe and Mail over the past few weeks. One, Vancouver single-family detached homes hit record high prices. Calgary, condo sales surge as home prices cool. Canada housing prices decline further, crash fears rising. In other words, they're worrying about a crash in the Canadian housing market. Where have we seen that before? Nothing new there. So I found it very interesting to see this particular article. It says, teetering on a wall of worry, showing a downward pressure, downward decline. Well, I'm thinking, oh, this must be another article about the pending fear of a pending housing crash. But no, they're talking about the stock market. Stocks are setting records and economies are on the mend. But market watchers are anxious as ever, as reports of the rising risks threaten to derail a roaring bull market. So in other words, there's as much as we talk about the pending crash on the real estate side, there's equal fear on the stock market side. Robert Shiller came up with a ratio. He called it the cyclically adjusted price earnings ratio. So don't get uptight about what that means. Bottom line is, when he measures his ratio and it hits a certain point, once it hits this certain point, there are 3 times in history where it did that, and there were crashes. 1929, 2000 tech crash, and of course the subprime crash of 2007, 2008. What he's saying is we're at that exact same point. The ratio has hit that point again. So, if Robert Shiller is correct, then we should be on the verge of a correction in the stock market. So what this does is gives fear and not panic per se, but a lot of confusion amongst investors. Should you put your money into real estate? Should you be putting into the stock market? Should you have a hybrid? Should you be looking for alternative investments? Well, that's where I'm looking at, and you know, when I'm looking at my clients and what's best for them, we decided that it was time for us to reevaluate how we're providing our products and services for our mortgage clients. So next week I'm going to be making an announcement of how we're going to be working with our clients moving forward. But for now, I just want to emphasize there's never been a better time to book a consultation, because whether you're looking at the headlines on the real estate market, the headlines on the stock market, you're just going to get confused with the messages, the mixed messages. And of course, as always, the truth lies somewhere in the middle. So again, if you go to peterkinch.com, send me an email. We're happy to provide you with a free consultation to help you navigate through this minefield, and looking to add more products and services to provide support for you in the upcoming weeks and months ahead. So again, I'll talk to you shortly with an announcement next week. In the meantime, go to peterkinch.com, send me an email, and happy to book a consultation with you. That's the Mortgage Minute for September 3rd. Thanks.